Good morning and welcome to First Bank's Center for Family-Owned Business webinar series. I'm Mike Vandervelde and I'll be your facilitator. Today, we'll cover the most recent updates to the Paycheck Protection Program, including information on second draw loans. As a reminder, keep a lookout for First Bank emails, and as always, be sure to check our website at first.bank for the latest information. Before we get started, allow me to cover a few logistics. The lines are muted, but at any time, please send us your questions through the webinar tool. For specific questions about your loan, please reach out directly to your First Bank relationship manager. And if we can't get to all your questions today, we will be creating an FAQ that we'll post on our site next week. We'll have a pretty full session, about 45 minutes or so of content, and then we will open it up and take some of your questions. All right, on to slide 2. Let's meet our presenter, Tim Fogerty. He's back and he leads the First Bank Midwest Commercial Banking team. Joining Tim is Kate Mayfield, the Director of Credit and Underwriting here at First Bank. And jumping over to slide 3, you'll see that we start with the Economic Aid Act updates, and then we're going to dive into the First Bank's second draw loan process. All right, let me jump over to slide 4 and read that disclaimer. I am required, so please bear with me a hot second. This presentation is furnished for informational use only. It is not intended to be comprehensive, nor does it constitute legal, accounting, tax, or other professional advice. We encourage you to consult with your legal, tax, and/or accounting professional for specific advice. This presentation is based on information available as of the first date and time of delivery of this presentation. Due to the evolving nature of the regulations and agency guidance addressing the Paycheck Protection Program, all information in this presentation is subject to change without notice. First Bank recommends a thorough review of the CARES Act, PPP Flexibility Act, Economic Aid Act, and SBA Interim Final Rules. These documents can be found at first.bank. All right, we are ready to dive in. I'll now pass it over to Mr. Tim Fogerty.
Okay, thank you, Mike. And thanks for everybody for joining us today as we cover the update of the Economic Aid Act that was passed just before the new year. Congress allocated $284 billion to this program. We're going to get into the details of it, and just so you know, we will be posting the webinar and this deck on our website later today. So if you're looking for some of the detail that we're going to go through in the appendix, or want to review it again, it will be available this afternoon. First, we're going to cover some of the updates to the existing PPP program. The first one is much awaited update on income taxes. The CARES Act specifically indicated that the forgiveness for Paycheck Protection Program loans would not be taxable. The IRS made a statement after that impact, said that while the forgiveness of the debt is not taxable, you could not deduct the expenses used with proceeds of the PPP loan, which in fact made it taxable. The Economic Aid Act clarified that, and it specifically allows you to deduct the expenses with the proceeds of the PPP loan that is forgiven, and that the tax base and other attributes of the loan and borrower's assets will not be reduced as a result of loan forgiveness. And they also expanded it to include that this provision clarifies that does not there's no taxability on certain other loans, the idle grants, or the grants for the shuttered venue operators. And this legislation is effective from the first date of the CARES Act. If you have other questions regarding the taxability, we suggest you talk with your tax advisor. Next slide, please, Mike. Again, simplified forgiveness forms. In prior webinars, we have indicated to people that had loans of $150,000 and below to wait for their forgiveness application, because we had anticipated a simplified forgiveness form. The Act did approve a simplified forgiveness form for loans under $150,000. The borrower will receive forgiveness if a one-page certification is provided to the lender that all funds were used consistent with the program guidelines. A certification will include the number of employees, estimated loan amount spent on payroll, and total loan amount. You're going to be required to maintain records to support those certifications for up to 2 years. All PPP loans previously forgiven that have not been forgiven to date are eligible for the short form forgiveness. The SBA has not provided us with this form yet. We estimate they've indicated by January 29th, the application will be available to the banks. We will convert that to an electronic document, and it should be available shortly thereafter. And at that point, we would encourage all of our borrowers under $150,000 to apply for forgiveness. If you've already received forgiveness, if you've already gone to our site and selected another forgiveness document, forgiveness form, you can reapply again and get the simplified form once it's available. And of course, if you've already submitted and if you've submitted the application and we've submitted to the SBA, you do not need to resubmit it. It's already been, your forgiveness has already been submitted. Next page, please. The EIDL loans, the Economic Injury Disaster Loan, was a direct loan from the SBA. Part of the EIDL is a loan and a grant. The SBA, the Economic Aid Act has indicated the SBA will no longer deduct the EIDL advances from loan forgiveness. If the lender already has received forgiveness payment, netting out the EIDL advance, the SBA will provide a reconciliation payment to the lender to be applied to the loan balance. More details are expected from the SBA as to the timing of these reconciliation payments. When we heard that this was approved, on loans that had already been forgiven that had a residual balance because of the EIDL, they began their principal interest payments based on the loan schedule. Once this came out, we suspended those payments, so we stopped billing customers for their P&I payments. We had about 70, 80 customers that were impacted by this EIDL reduction. When we get the reconciliation payment, we will also reconcile with those payments that have already been made by those clients. Next. Okay, the next page is the ability of PPP1, the first phase PPP borrowers, to request an increase in the loan amount. Borrowers who proactively returned all or part of their PPP loan can reapply for the maximum amount applicable as long as loan forgiveness has not been received on the loan. Borrowers whose calculations have increased due to changes in interim final rules throughout the PPP process can work with lenders to modify their loan values of whether the loan can modify the loan balance regardless of whether the loan has been fully dispersed. A lot of the confusion early on the program related to what was eligible in the maximum loan amount as pertained to benefits, and that's been clarified. We have some clarification in the addendum section of our deck to clarify it. The SBA has not guidance on the application of this provision. There's no applications being taken at this time, and they need to give further guidance on this part of the Act. Next page, please. Okay, we're going to cover a little bit of the first draw loans and the second draw loans. As we mentioned before, $284 billion has been allocated for this PPP program. A lot of it is funds left over from the PPP1 program that ended in August. In conversations with the SBA, they believe that this dollar amount is going to be sufficient for the demand based on the fact that there was waning interest in the program for PPP1 borrowings at the end of the program. These loans are capped at $2 million. There's a qualification to apply for this loan that you have to have a revenue reduction of 25%, and no public companies are allowed to apply in this round. We're going to spend most of our time today on PPP2. Next slide, please, Mike. But if you did not get a PPP1 in the first phase, you are eligible to apply for a PPP1 loan. Our audience today is made up mostly of our clients that already have PPP1 loans, so we're not going to go into great detail on that. A lot of the same changes and provisions applying to 2 applies to 1, but if you had not received them, you are eligible for a PPP loan. Some of the conditions, it allows employers up to 500 employees. And you'll see as we get into it, the PPP second draw lowers that threshold to 300 employees. But it also expands the allowable usages for the proceeds. It expands some of the entities eligible to borrow. And we will be taking PPP1 applications, first-time PPP borrowers, we'll be eligible to start taking them next Tuesday. And the program for both PPP1 and PPP2, second draw, lasts until March the 31st, 2021. Okay, the second draws. We're going to spend most of our time today on second draw. The Paycheck Protection Program allows certain eligible borrowers that received a PPP loan to apply for a second draw loan with generally the same terms and conditions. Again, this program will be starting next Tuesday, and it will last through March 31st, 2021. Excuse me. PPP eligibility. Who can apply? This is basically the same as the first PPP1, business entities, partnerships, corporations, LLCs, sole proprietorships, independent contractors, self-employed individuals, 501c3s. The new addition was this 501c36, which includes chambers of commerce, those types of organizations. So these will be available for, these are the organizations that are available, entities that are available for 1 and a 2 loan. There is a list in the appendix section of those entities that will not be allowed to apply for a second draw loan, which includes political lobbying companies, public companies, and companies that are eligible under the Shuttered Venue Grant. This is a separate grant program that's in the Act that allows theaters, concert halls, venue operators to apply for a grant. It's a little bit more generous of a program, so they're restricting your ability to a second draw loan because they have the ability to apply for the grant program. Okay, second draw, again on eligible, next page, please. Next, yeah, there you go. Previously received a second draw loan, and they have already used all the proceeds for the authorized purposes. So this generally is not going to be a problem with most of our borrowers. It's basically saying the dollars that you used and the loan that you got, the first PPP loan, that you've spent all the money for appropriate purposes. And so given the fact that you had the time frame between the two, this should not be an issue with any of our borrowers. In this particular program, an employer can have no more than 300 employees with certain exceptions by SBA codes and exceptions for NAICS Code 72, which is food and accommodations. So basically restaurants and hotels. Those organizations will be allowed to have up to 300 employees per location. And this is really recognizing some of the hardest hit sectors of the economy. You're going to have to be able to demonstrate that you have at least a 25% reduction in gross receipts between comparable quarters in 2019 and 2020. So basically, if you have to compare quarter to quarter. So most of our clients were hardest hit in the second quarter of 2020. So I'll take that as an example. You'll take your revenue from the second quarter of 2020, compare it to the second quarter of 2019. If you have at least a 25% reduction in gross receipts, you would qualify. The second draw loans are limited to $2 million. If you recall, the limitation was $10 million in the first round. Total PPP loans, so your first draw and your second draw loan is limited to $10 million. So if you borrowed $9 million in the first round, you're only eligible for $1 million. We're not going to go into the details today of the definition of gross receipts. The SBA has provided a detailed description of gross receipts. We've included that in the appendix section of the deck so that you can view that later when you pull it down. Next page, a little bit more about, I think I gave a demonstration here. The bar calculates revenue reduction. There is a application here that we already used that example. Let's go to the next one, Mike. In this particular page, this is really recognize some of the smaller borrowers that don't do quarterly calculations of revenue. You have the ability to compare your 2019 revenue, the entire year, with your 2020 revenue, and you can qualify using that calculation. Next slide, please, Mike. Okay, so for PPP loans, if you're requesting a loan that's over $150,000, you will be required to provide documentation supporting this 25% decline at the time of application. So Kate will get into that when we go through the application form. If your loan is below $150,000, you will not be required to provide the documentation at the time of application, but you will be required to provide supporting documentation during the forgiveness process for your second draw loan. This next slide speaks to the maximum loan amount. So like PPP1, for most borrowers, the maximum loan amount of the second draw loan will be 2.5 times the average monthly payroll for 2019, or you have the opportunity to select 2020 for payroll costs up to $2 million. Borrowers in the accommodation and food sector, NACIS code 72, will have the ability to, the multiplier on that of payroll is 3.5 times. And again, that is a recognition of the hardest hits in the economy. In the appendix section, we have a detailed list of all types of companies that qualify under NACIS code 72. I think we've already mentioned before the third one, if you were in 72, you are allowed 300 people per location. Okay, allowable uses for the loan proceeds for first and second draw loans. Payroll cost, similar to the first, and we've also put a detailed definition of what is included in payroll costs, which includes payroll and benefits in the appendix section. Mortgage interest, rent, utilities, those were all available uses for loan proceeds in the first round. The SBA has added additional uses of proceeds, which include worker protection costs, PPE, related to COVID-19, uninsured property damage costs caused by looting and vandalism during 2020, and certain supplier costs and expenses for the operation. We've also included a more detailed explanation of those last three, a description of those last three in the appendix section. You know, this is a nice to have. They've added additional to this. And just to remind everybody, you know, you're borrowing 2.5 times or 3.5 times payable based on your SIC code for borrowings, but you have up to 24 weeks covered period to spend those monies. So most of our PPP loans in the first round were able to cover most of the loans just with payroll and payroll costs without using other expenses. Okay, thank you, Mike. Second, the terms and conditions for the PPP loan second draw are the same as the first. The SBA will guarantee 100% of the loan. There is no collateral required for the loan. There are no personal guarantees applied for the loan. The interest rate of the loan will be 1%. The maturity of the loan is 5 years. And the first part of PPP last year, it was 2 years. It was expanded during that program to 5 years. So some of your PPP loans in the first round may have been 2 years. It could have been 5 years, depending on when you applied. In this second draw, it's going to be 5 years. There's a deferment of any principal and interest on these loans for up to 10 months after the end of your selected covered period, similar to PPP1. The view is there that you will have applied for forgiveness and you will have been given forgiveness of the loan, and the loans will be forgiven and not deferred. But in any event, if there is a portion that is not forgiven, it will be payments will start at that time, or at the time that loan forgiveness is given. So if you've gotten your loan forgiveness and there was a residual amount, P&I payments will begin at that time. If you've not applied for forgiveness, it will start 10 months after the end of the covered period. Second draw PPP loans, full forgiveness terms. This is very similar to the first round. Second draw loans are eligible for full forgiveness using an 8 to 24-week covered period following the loan. So basically, you can do it in 8 weeks, you can do it in 10 weeks, 12 weeks, you can select your covered period. They just clarified it a little bit from the first round because they said it's an 8-week or a 24-week, but they did allow people to use any covered period in between amount. They just clarified that's available. Again, your employee count and the compensation levels are maintained in the same manner as required for first draw loans. So if you did have during the time of the loan and the covered period, if you've had a reduction of employee count or you reduce per hour wages or salaried wages, there could be a discount in your forgiveness. The loan proceeds need to be spent on payroll costs and other eligible expenses, as we already outlined, and 60% of loan proceeds must be spent on payroll costs. It's not in the deck. It's something that I want to add that we learned recently, but if your first draw loan is under review or audit by the SBA, so generally if the SBA, if you've applied for forgiveness and the SBA has taken the forgiveness document and then replied back that that loan is under audit, which includes all loans over $2 million, there could be a delay in the approval of your second draw loan. The SBA has indicated that if we make that application, an error message comes back, and then we have to reply back to the SBA, which we will, that we're asking for them to escalate the forgiveness for those loans that are over $2 million that are under review. Next page. Okay, so as with the first loan, in the application, there'll be a certification you'll make about the economic uncertainty and your need for a PPP loan. And we just wanted to remind people of the necessity certification that must be made. And basically, borrowers must make a certification in good faith, taking into account their current business activity and their ability to access other sources of liquidity sufficient to support their ongoing business operations in a manner that is not significantly detrimental to the business. For example, it is unlikely that a public company with substantial market value which has access to the capital markets, will be able to make a required certification in good faith. So we wanted to remind everybody that needs certification is also going to be part of this application. I'd like to remind people that this deck will be on our website later today. Go to our website. We have a COVID-19 red ribbon on the top of it, and you can access this presentation as well as prior presentations and prior information regarding the PPP program. We made a number of improvements. We've had more time to plan this particular time than the first time. We made improvements to our application process. I'm going to hand this over to Kate, who's going to take us through our application.
All right. Hi, everybody. I'm Kate Mayfield. I'm the Director of Underwriting here at the bank, and I'm going to walk through what you can expect from our PPP loan process. All right, so this first slide is going to show how our application process will work. If you want to apply for a PPP loan in this round, the first thing you'll need to do is contact your relationship manager or branch manager and request an application. They'll respond with an email link to an application portal. Once you get the link to the portal, you'll set up a username and password and fill out your application online. In a few minutes, I will show you what the portal actually looks like. But before I go through that, I want to finish explaining the overall process. So you start by filling out the app online, and then you will digitally sign the application. At that point, your digitally signed application will go to a review team here at the bank, and they will review it for completeness. And if anything is missing or if the reviewer has any questions, somebody will contact you. But if the application is in good order and is ready to go, then First Bank will submit the loan request to the SBA. When the SBA approves, they'll return the approval to First Bank along with an SBA loan number. Please keep in mind that none of this is going to be instantaneous. The SBA is going to take a few days to approve loan requests, and the bank will need time to receive this approval back and complete our documentation process. So Once the documentation process is complete, we'll email the documents to you. When you sign and return the docs, then the loan proceeds can be funded into your First Bank deposit account. So that's the full process from application to funding. All right, so if you go to the next slide. Oh, sorry, that's the funding process. Next slide after this. Okay, this is the actual portal. Once you create a username and password and get all of that set up, then it's going to take you to the actual online application. Up at the top of this page, it says the requested information is required to make a loan determination. This means that you need to fill out everything, including the application, the required certifications, and you need to be sure to upload all required attachments. Without all of that, the app is incomplete. I cannot stress this enough. Please do not neglect the attachments. Another thing to note on this page is that there's a little blue box under certification, and they drew a red box around that. Be sure to click that box to certify, or else the app is not going to let you proceed to the next page. All right, that's everything on this page. So let's go to the next slide. This is the business information page. Fields with little red stars are required fields. Also, anytime you see one of those little black circles with an I inside of it, it means you can click that little I for help or explanation on filling out that particular field. One important note about the SSN/TIN field: if you are a sole proprietor and you file Schedule C tax returns, then you will need to use your Social Security number to apply. Although you might also have an EIN, it is vital that you use your SSN to apply, because that's what the SBA is requiring and that's what they're going to be looking for. The next point of interest on this page is the loan information section, which has a red box around it. This section is going to ask you, is this your first PPP loan? Depending on how you answer this question, you're going to see different things come up on the web app. The screenshot here that I'm using is for a first draw loan, but if this were a second draw loan, then you would see some different options come up. For a second draw, it's going to ask you information about your quarter-over-quarter revenue decline, and also if your industry code starts with a 7.2, it's going to give you the option for a loan that it's 3.5 times average monthly payroll instead of 2.5 times. Another thing to note here is the name of your First Bank relationship manager or contact person. Please have this information ready, because it will help facilitate communication if the PPP loan underwriters have a question or need a document. Okay, now we're into the actual loan details. Oh, no, I'm still on the previous slide. Yeah, thanks. Lot to say on this one. Okay, so determine the maximum PPP loan amount. You figure out your average monthly payroll expense, multiply by 2.5 for a first draw, and by 3.5 for certain industries in a second draw. If you're struggling with coming up with what average monthly payroll means, if you're struggling with that calculation, you can click on the blue box and it will link you to a definition. Once you figure that out and multiply it by 2.5 times, that is going to give you your maximum allowable loan amount. But you don't have to get a loan that big if you don't want to. It's perfectly okay to request a loan that is smaller than the maximum amount. Another thing to note is underneath the requested loan amount box, it says average monthly payroll times 2.5 plus EIDL. EIDL stands for Economic Impact Disaster Loans. The only EIDLs that can be added in here are IDLs that were issued before April 3rd of 2020. If it was issued after that, you can't refinance it with a PPP loan. There were actually very few IDLs issued before April 3rd of 2020, so I expect that this would be a rare situation that you would be adding it in here. The last thing you need to do on this page is tell us how you expect to use the proceeds. You don't have to say how much you expect to use in each category, but do just basically say which categories you expect to spend the funds on. Okay, now we can go to the next slide. On this page, you will give information about ownership. Last time around, the SBA wanted information on ownership totaling 50%, but I have heard that this time around they only want 20%. Before we do go live on Tuesday, we will confirm what the requirements are this time around, and we'll make sure that this online application that you see will tell you the right thing to do. But as of right now, to be safe, I would assume it's going to be 50% again so that you're ready. Okay, next slide. On this page, you'll be completing a questionnaire. Read these questions carefully. The right answers are not all yes and they're not all no. If you answer wrong, that could result in the SBA returning a decline. We don't want that. So next slide, please. This is the attachments page. It's a very important page. Attachments are required by the SBA. If you don't submit attachments, it's just going to prolong the entire process because we'll have to contact you to get them before we can apply to the SBA. So it's best to just do it right the first time. Another thing to note here is that the attachment requirements that you will see on your online app are different depending on what the business type is. So way back on that business information tab at the beginning, it asked you about business type. Whatever you enter there will impact what type of attachments you need to submit. For example, if you're a sole prop, the SBA is going to ask for your Schedule C. If you're a partnership, the SBA is going to want to see your Form 1065-K1. They're going to want a lot of other stuff too, but these are just two examples of how it can differ from type to type. Another thing to understand about attachments is that at this point, at the application stage, the SBA is only looking for information on payroll. They're using it to confirm your average monthly payroll figure so they can determine that your loan is the appropriate size. They do not need validation of rent and utilities and all of that yet. That is the stuff that you'll need to provide at forgiveness. So now you only need to provide payroll. So in summary, attachments are very important. Please follow directions on this page. Next slide, please. This is the demographics section. It's for SBA record keeping and it's totally optional. You can skip it if you want to. Next slide. This page gives you a chance to review your entire application. If you see something wrong, it's your chance to go back and fix it. All right, next slide, please. All right, this is the final product of the application process. The web portal is going to take all the information that you input into all the screens and it automatically fills out this form. The example up on the screen is blank, but in real life, it's going to be fully filled out with all of your information. If this is your first SBA loan, it's going to be a Form 2483, which is what's up on the page. And if it's your second SBA loan, it will be a Form 2483 SD for Second Draw. You will then be able to e-sign your application form and submit it to us for processing. There's going to be a team of people checking the apps, and if they look okay, then the team will submit them to the SBA. It's important to note, again, that once the app is submitted, the granting of the SBA loan is not an instantaneous process. The SBA does take time to approve these, and before they approve the loan, they do some checks of their own. So please be patient. Like Tim said earlier, the SBA is not expecting to run out of funding early, so there should not be anything to worry about. Next slide. All right, that was the end of the application process, so now I'm going to turn it back to Tim.
Okay, Tim, you might have to take yourself off mute there.
You just did, thank you. Mike, okay, here's just some resource page that we have up. The Treasury Department has a good website with a lot of detail, as does the SBA. We have almost all, probably all that data is available to you on our website. And you can go there, go to the COVID-19 page, and you'll find a lot of resources, which is going to include, Kate went through our electronic application. The IFR, internal final rules that the SBA issued, it was posted last week. And so it's a, I don't know, 60-page document that gives you a lot of detail of the program. If you have additional questions that we didn't cover today, we tried to summarize that, but the IFR, full IFR is available. There's two IFRs that are available, one for first-time borrowers and one for second-time borrowers. We also put the applications out there. Do not send us those applications. You can use them to review. the actual SBA applications and print them out and discuss them among yourselves, but our applications are going to be electronic. So we won't accept any applications if somebody pulls it down and emails it to us. Our applications are going to be online. That way we're able to automate that in its delivery to the SBA. Next page, Mike. Here's the appendix that we kind of talked about earlier. Go to the next slide, please, Mike. The definition of gross receipts is on here. I'm not going to go into detail. People can read through this. Some of the things that don't, like your PPP loan from the first round, that's not income. You cannot include that as income in your second draw loan. For those customers or clients that charge retail taxes, you can't include taxes in it. It's got to be retail less the tax amount. So all that detail is available in this slide. Next slide, Mike. We talked about this is the codes that are available, and NACES code 72 that are available for the 3.5 times multiplier, as well as the 300 employees per location. You can move forward, Mike. We talked about payroll costs. Here's the detail of the payroll costs. We talked about a little confusion in the first round. I think one of the questions I think we're getting through the portal right now is, and I forgot to mention, payroll is limited. If somebody makes more than $100,000, they're going to be capped at $100,000. So if an employee had $200,000 included in payroll costs, you can only show that as $100,000. So there's a cap for that, and that cap includes for all owners of the business. And then the second bullet point there really gets into the benefits that are included to be added into payroll costs: group life, disability insurances, retirement benefits, or wages, commissions, et cetera. Those are included in that bullet point. And again, that third bullet point really that goes into the exclusion of those making over $100,000. So they would be limited to $20,000, $833. Next slide, please, Mike. Won't go into that. That's more detail on the cost calculation for payroll. Next slide. We talked about that earlier about the excluded entities. Again, there's an exclusion for percentage higher. I think it's over 25% entities owned by the ownership of anyone from China. There's public companies, et cetera. So that's available for your review there. Any entities, members of Congress that own more than 20% are excluded. Slide, please, Mike. Again, a little bit more. We talked about earlier about this new cost that Section 304, primarily on this slide. Those are those new expenses that your business may have that is available to be used with the proceeds. Those were the operating expense, damage costs, PPE expenses, et cetera. Okay, next slide, Mike. Okay.
Ready for questions.
That's the end of the presentation. Mike, were you saying something?
Yeah, we're ready for questions. So Tim's going to go through some questions now. We do have a bunch of questions that came in. Where possible that we need to give you a direct answer, we can get back to you directly with that. If we can't, if we run out of time to address that here, I do want to remind folks that we are going to take questions that can be answered as an FAQ and post those to our site next week as well. So just bear with us. We will get answers to your questions. With that said, Tim, we do have some queued up for you there in the chat.
Okay. Hold on a second. Let me find that. Yeah, my chat's not coming up, but I do have a couple of the questions we got during the program. Somebody's asking, go through the advantages and disadvantages of taking part of the PPP program. And, I'd say that it's clear there's advantages that you can, for those companies that have been hurt by COVID-19, you have the ability to get a loan that's forgivable. to help maintain your employment at your businesses. So clearly there's a lot of advantages in that, particularly now that those proceeds won't be taxed. The disadvantages is it takes time, right? The application process takes time. You're going to have to gather some information, apply, and anybody that was involved in PPP1 will tell you that sometimes there's rule changes throughout the process. I think it's a lot clearer now. I think a lot of that was really vetted out during the first phase of the program in PPP1, but it will take some time on your part during the application process and during the forgiveness process. If you had previously requested forms for forgiveness, can I apply under the shortened form? I think we covered that. Yes. If you've already applied, if you already requested forms and you haven't submitted it, and we haven't submitted it to the SBA, then you can go back to that portal again and apply for the new forgiveness form for 115 below once it becomes available. And yes, it's eligible for our borrowers, whether it's a non-for-profit or for-profit corporation. I'm a union contractor. Can union benefits for employees be applied for forgiveness portion? The benefits for union contractors can be included. Those benefits that are healthcare, retirement related, those can be included in cost of your maximum loan amount, and they are included in your payroll costs for forgiveness. We talked about the cap on the loan. There is a cap per employee, $100,000 limit. Kate, you can take some of these if you have access to that chat box. I can't see that right now.
Oh, I've actually been responding within the chat box. Let's see.
There's a lot of questions. I'll review it one more time again, but it seems like there's a lot of questions about the 25% threshold per quarter. So I'll repeat, if the qualification is a 25% decline in revenue, in gross revenue, not net income, but gross revenue quarter over quarter, and you have to use like quarters. So if you're looking at all your quarters for 2019, all your quarters from 2020, you can select any of those quarters for comparison. I think I used the example when we talked about it in the second quarter, where most people were hit the hardest. You take your gross revenues for that quarter, second quarter 2020, compare it to the prior second quarter in 2019. If it's a 25% reduction, then you would qualify for that. If you've applied for forgiveness, other than those loans over $2 million that may be under review or likely going to be reviewed, you do not have to have forgiveness already for PPP1 to apply for PPP2.
You want me to take some, Tim?
Yeah, that'd be great, Kate.
Okay, so here's one. If we received a PPP round 1 loan and returned it, are we considered to have never received it and we can reapply as a round 1 applicant? In those cases, you would actually be eligible for that new provision that's coming out, a PPP first draw loan increase. They've given some guidance about that, but they haven't given us any forms for that yet. But yes, you will be eligible to basically redraw that initial first round PPP loan that was returned. Let me keep going. Okay. Here's one that I am going to have to do some research on this. If some portion of the first PPP loan is deemed not forgivable, are you still eligible for a second round PPP loan? I am going to have to research that and take your name down and get back to you. I'm not sure about that yet. Does payroll costs include payroll to corporation officers? As far as I know, as long as it's capped at $100,000, it doesn't matter if it's going to an owner or to an employee, as long as it's capped at $100,000. Okay. Let's see. Yeah, I haven't applied for forgiveness from first draw. Can I apply for second? Yes, as long as you've used all the funds from first draw. What documents qualify to support a 25% reduction in revenue? That'll be a quarterly financial statement. It has to be a calendar quarter, not a fiscal quarter, or a year-end financial statement if you don't do quarterly financials. And if you weren't in operation in the comparable quarter of 2019, like if you want to compare second quarter 20 to second quarter 19 and you weren't in operation in second quarter 19, you can use first quarter 20 as your base quarter. Are personal service businesses, spas, nail salons, etc., eligible for a loan of 3.5 months of payroll? I'm not sure what the industry code for those businesses is. It's only businesses that start with an NAICS code of 72 are eligible for 3.5 times. And as far as I know, that's things like restaurants. So take a look at your industry code on your tax return. Are EIDL funds included in gross receipts? I don't think that they are. I know PPP loan forgiveness is not included in gross receipts, so I would think that any sort of government funding like that is not going to be included in gross receipts. If we're under review, can we still apply for a loan for round 2? You can apply. It's just we're going to have to contact the SBA separately and ask them to expedite your review process. And I can ask, but I don't have any concept of how long that's going to take.
Kate, let me respond to one question here about self-employed Schedule C filers. And we had a lot of these questions in the first round on the sole proprietorships, self-employed with just that one individual, and how to calculate payroll costs. In those particular cases, same as PPP1, you take your Schedule C from your tax returns, and it's based on your income, your net income on your Schedule C. So, for example, if you have net income on your Schedule C of $150,000, then you lower that amount to $100,000 because $100,000 is the cap for individual borrowers. So it's you lower that amount, you divide it by 12, you multiply it by 2.5 times, and you will get to $20,833, and that is the loan amount, maximum loan amount that you're qualified for. Same as it was in PP1, and that's good for schedule sole proprietorships. Anybody's on a Schedule C or Schedule F, where it's farmers, that's your basis of your maximum loan amount. One is, can the PPP second draw be more than the first? It can if your maximum payroll and cost using is higher. Again, there's a lot of questions about when we're going to start. The expectation is that we'll be available for applications next week on Tuesday. I can't see any more, Kate, that we haven't answered yet. Do you have any more teed up?
No, I don't see any more. Maybe if Mike sees any in the queue, he can let us know.
Well, I tell you what, why don't we, as Mike said, the questions, if you're asked questions that haven't been answered, we are going to post the Q&A on our website later. Once we get all the Q&A, by next week, we'll have the Q&A posted to the website. And with that, Mike, I think I'll turn. Hey, there was one question too. There was a question from a listener that asked about our webinar last week. We had a webinar last week that was regarding vaccinations and can you require your employees to get vaccinations. It was a really well-attended webinar. We had really good legal advice. Our partner from Brian Cave talking about it. So that webinar and the deck that was used in that webinar is out on our website as well. With that, I'll turn it back to Mike.
All right, very good. Thanks so much, Tim. So this is what I'm going to do. We still have 9 minutes left in the session. So we're going to end here in a moment, but I am going to keep the session open so you can continue to submit questions. We're going to take all those questions, and where they apply to more than one person, we'll create an FAQ around that. If you need a response directly back to you, we'll respond back to you as well. So we will, again, leave this open to give you some time to submit some more questions. Just a quick reminder, we do have 2 upcoming webinars, one on January 21st, where we will explore the 2021 market outlook. And then on January 28th, we'll hold our second webinar in our Women-Owned Business Series, this time focusing on HR and employee benefit trends in 2021. I'd like to thank you all for joining us today. A special thank you to Tim and Kate for their time and expertise. Please do take just a few moments to complete a brief survey that's going to pop up here in a moment to help us improve our service to you. With that said, have a great day, everyone. We'll catch you next time.